Welcome to Fintech Chatting, presented by Tier 1 People, leaders in fintech executive search. Follow us on your favorite podcast player or Fintech Chatter TV on YouTube.
Hello and welcome to Fintech Chatter, the show for all things fintech down under. I'm your host, Dexter Cousins, and today I've got two really cool guests with me from Scalare Partners, Giles, Bourne and Jenny Lee. Giles, Jenny, welcome to Fintech Chatter.
Thanks for having us on your show.
Thank you.
Now, I've brought you on for a very specific reason. Probably the greatest challenge. I think it's almost a kind of watershed moment for the fintech industry here in Oz. Is last quarter, the investment numbers were down 90% on the corresponding quarter of 2022. And we're kind of reaching crisis point for a lot of early stage businesses out there who need to secure funding in the next 12 months or get a path to profitability or cash flow positive in the next 12 months. I've got a long kind of relationship with Scalare. You're for me the standout kind of investment partners that I think, and you've got a really unique approach. So it's fantastic to have you on the show. But before we go into kind of the whole Scalare, set up, Jenny, Giles, Jenny, would you like to introduce yourself first and let us know a little bit about who you are and your background?
Yeah, sure, absolutely. My professional background is finance and commerce. I spent the last 15, 18 years working with early stage company, building the business, growing as well as exiting the business. I've done that a couple of times. I'm just really passionate about working with early stage founders and make their dreams come true. So I am a partner of Scalare Partners, also a member of IC, Investment Committee.
And a little birdie tells me that you get very excited by the word cash. Is this right?
I love cash. I think that is part of the key reasons why, that's what makes the founder successful in what they do, right? But also cash runway turns out to be the number one critical factors and the number one reasons why early stage company can fail, despite the fact that they have awesome product and idea. So cash is critical for a company at that stage. And we work very closely with the companies to really be smart about how and when they spend their cash.
So Giles, we were introduced by James, who's a good friend of mine I've known for a number of years, and you kind of founded Scalare with James. Do you want to tell us a little bit about you and your background?
Sure. So my name's Giles Bourne. I come from commercialization of technology. So I've been in Australia for 25 years, having come from the UK, much like yourself, Dexter. We saw the light and wanted a bit of sunshine, and it brought us here. But very happy to be here. But I've been working in pretty much a fairly diverse range of technology companies, from software through to polymers and in semiconductors. But it's all about commercialization of sort of emerging technologies. And I've absolutely love that space, always been involved in it. And that's the reason why we started Scalare actually 3.5 years ago, is because we saw an opportunity to invest in early stage tech, but not just invest, but really sort of help the founders in their scaling up journey. And that's always been a passion of mine since I've been here in Australia.
Now, obviously, the portfolio is a lot broader than fintech, but some of the notable names that I'm sure many of our listeners would know would be Frankie One, Cape, just a couple of the fintech investments that you've got. But do you want to tell us a little bit more about your kind of portfolio a little bit more broadly? And I think importantly, what you look for when you're looking at businesses to invest?
Sure. Well, so, look, we've got a fairly broad portfolio. I'll start off and perhaps Jenny, you can say a few words. But, we've got 26 companies now in the portfolio, not all in Australia. We've got a couple in the UK, we've got the US, Singapore and Holland as well, but mostly here because that's where we're based for a good network across. But what we're looking for in the portfolio always is a founder who's got great passion. Obviously, the technology is fundamental, but someone who has got great passion for what they're doing, but realizing that they need not just capital, but they need help to grow their business. And that's where we can sort of use our expertise. Obviously, Jenny's had deep expertise in finance and working in the startup industry. James Walker, you mentioned earlier, and Nick Roberts have both been involved in early stage tech companies, scaling them up. So we can use that sort of expertise. We've been through the rough and smooth and work with the founders to help them grow the business. And that's really, we're looking for founders who understand that they need more than just cash, but they need help to grow the business. And that's where we step in.
Jenny, from your side, what are the kind of things that you look for? You're CFO, so you're the kind of the cash, as you mentioned. What are the things that you look for in a not just in founders, but in a product as well, or an idea that gives you confidence that it's worth investing in?
Yeah, I think investors look for different things during different time. In this particular 18-24 month, I've been hearing a lot about client stickiness. So not too much about how aggressive, your product or your revenue can grow, but in terms of your client loyalty, your retention rate, your ability to upsell. I've been hearing a lot about capital efficiency. And so, for example, if I invest $1 today, where do you deploy that to maximize the return? Probably for early stage company, particularly technology companies, we're looking at your development to income ratio, and also your client acquisition cost. So a lot of those metrics that kind of talk to your capital efficiency, your net burn, your runway, your client retention and growth becomes a lot more common these days, and your path to profitability, which you mentioned before. Yeah.
So if I go back maybe 12, 18 months and I look at the briefs that I was working on, pretty much everyone had a mandate of go and find us somebody who's coming from Silicon Valley who can go and scale the business, and kind of growth at all costs. And 6 months later, I was like, stop the search. All bets are off. Just go and find us somebody who can manage a P&L, keep costs down and increase revenue. We've seen very quickly, not just here in Oz, but I think globally, the mindset shift from growth at all costs to cut costs at all costs. What have you found from, just like within the portfolio and founders, has been the challenge for them to completely kind of reset that mindset and move more into that mindset around P&L management and just managing costs and kind of trying to, scrimp and save?
Yeah, well, maybe I'd just kick that off, but just look, obviously when we started Scalare, there was a lot of capital available, valuations were high. It's a very different environment today, And so our message to our founders, as always, is managing their cash as best they can. Going out and doing capital raises is a lot more time consuming, a lot more challenging than before. And when we started raising money, investing in these companies, we would have a community that would come alongside us. They're much more risk averse at the moment. They're cautious, although things are beginning to change, we see, slowly but surely. But so a message to the founders is always, look at your cost base really closely, focus on growing your revenue line, your customers as much as you can, and try and manage that as best.
Yeah, Jenny?
Yeah, I'd just like to add a few more points as well. I think, first of all, let's acknowledge it is actually very hard for founders to think or not to think growth, right? Because it is part of their instinct that I have a dream and I think this dream is big and I'm going to make it huge, right? So shifting that mindset, I think, well, first of all, it will come to that realization moments that it's just harder to find capital these days or takes longer. So I have to adjust my own expectation. But secondly, equally important, I think, is education. Be aware of what options are out there. So for example, for me to, extend my runway or find a path to reach break even sooner, have we thought about profit sharing? Have we thought about ways to delay expenses? For example, paying out ESOP rather than cash, or more of a commission scheme. So a lot of those alternative ways to run your business with that mindset to be more cost conscious comes with education, and that's where Scalare can play our active part, because we have resource hub there that show the founders these are the options that you can consider.
Maybe just to add to that also, one thing that we've started working very closely with is someone to help on the grant writing process. There's a lot of good grants out there and a lot of good support, non-dilutive support for companies, and so that's become front and center of our advice to the companies, is sort of working on looking at both regional, state and federal grants that might be able to support it, any sort of non-dilutive funding that comes about.
You talked there about managing costs, and the biggest cost for any of these businesses is their people. One thing that's been really interesting from my perspective has been to see the shift in skills, experience, and outcomes that businesses are looking for from talent. So I mentioned before, you're looking for the Silicon Valley unicorn. Now you're just looking for the person to manage the P&L. But we've also kind of had a lead-up period where salaries went out of proportion. We were seeing people with 2 years experience demanding $200K. it's obviously clearly unsustainable, and it's even more so now. Is there, I guess, a legitimate case to kind of be advising founders around headcount reductions, redundancies, or even looking at completely reskilling their teams to shift towards what is now it looks like it's going to be a kind of longer term environment rather than a short dip?
Yeah, look, I'll just kick off with that and then Jenny can say a few words. But yeah, look, absolutely. So what we've done is we've got an HR service that we're sort of helping our sort of portfolio companies with.
Interesting, because look, what I don't want to be doing is advising people stuff that legally then they get into hot water.
We're sort of trying to give them that advice, but the other thing we're trying to do, rather than sort of having the cost of having permanent sort of staff on your books, is provide a fractional service. So fractional CFO, CMO, sales, etc. So try and let them manage their costs by pulling in the resources on a needs basis rather than having that cost the payroll.
I think one thing that COVID taught us is the way that we run our business these days is very different, right?
Yeah.
So there is the virtual environment, there is the part-time contracting model out there, there's the offshore, right? So I think just jump out of that traditional thinking, that box, and understand what the options. I'm just going to give one example. So one of our portfolio companies based in UK, is a smart audio-based fitness app. So they're thinking of expanding their business into this side of the map. Next stop is probably Australia. So that migration usually costs a large amount of investment, right? So what Scalare can help is, we have people here helping to, fine tune their go-to-market strategy and have workshops with this company to kind of target their first, 10 customers in this. So let's set up the partner foundation for them, including finance, corporate governance, and all of that is at probably not even 1/5 of the cost that usually the old model, you have to invest a lot in legal compliance and, go to market. So those are the examples that we see more and more often these days within our community as well as outside our community.
Yeah, it's a good point. I mean, with that particular example, we're rolling up our sleeves, helping with our sales, just helping them establish here in the country. And we've got the resources in the sort of Scalare team to help them do that, and keeps their costs down.
I want to double click on the fractional exec thing that you mentioned, because I'm critical of that kind of model, not because it doesn't work. I've been an advocate for it for many years. And indeed, when James was telling me about his vision around Scalare, I was like, yeah, brilliant idea. And the reason why is that James is probably one of the people that I would put as, how the fractional exec worked is it's pretty much impossible, unless you've got lots of experience at doing it, to be able to work fractionally for 3 or 4 startups and put the mental agility and the challenges that come with that. And the other thing that gets me is time. If you got 4 clients, they all could have demands at the same time, and you can't just say, hey, well, I'm not rostered in to catch up until next month. So how do you make this kind of Scalare Partners model work so that the portfolio businesses are getting the right expertise at the right time and the very moment that they need it?
Well, maybe got to kick off in this one, Jenny. But look, for some work, it's fairly prescriptive. You're doing finance, preparing management accounts, doing all the finance activities. There's a certain amount of allocation of time per week. So, people can do that, and it's what you're doing. For other services like sales, it's obviously a bit more fluid. It can be time consume one week and less time the next week. And so it's for us to try and manage that. So we're building teams to help drive that forward. I mean, some of the fractional work that we're doing at the moment is well and truly established and it's working really well. Yeah. And our clients get a really our portfolio companies get a really good use out of it. Other ones, we're still experimenting with it, but so far so good. But it's up to us to try and manage the time well.
And I think also we are the investor as well, right? So our interests are totally aligned. We are not just an external consultant, right? So every month, our core team comes together and we talk about every single investee companies, what opportunities we see, what challenges they're trying to solve. So coming back to Giles' point about we have a team, I feel that our understanding about the business that we invest is 360 degrees. So we have non-executive director innovators who, in contact with the business every day, week, month. And then we have consultants, advisors who really come in and solve real tangible problem. And then we also have a community behind which really review and listening to these companies and get their feedback. So I feel like the combination of this makes our model successful. And that's what we feel proud of.
But to that point, that all of our companies, cost is a real issue. So that they like that, being able to pull in a service on a needs basis, not having the headache of having payroll. I mean, as they grow, it changes, So, for example, like Jenny was CFOing on a fractional basis for one of our companies. That company's now grown up and they've hired a full-time CFO. So being able to flex up and down for the companies is so important in that early, when you're not quite sure when your next capital raise is going to be, how much it's going to be. So trying to trim those costs and keep them managed, it's working really well.
Yeah. What, aside from, I guess, the lack of investment and the lack of dollars that have been out there, I think one of the other common complaints that I hear from founders when they're dealing with investors and VC has been that, the advice that they've been given through this period has been fairly vanilla and generic. And it's almost like memes that, well, don't worry, great businesses are built in a downturn. Or, you just got to get the cash flow positive. So it's kind of, there's
not that easy always.
Right? Like how, so from what is it about that kind of Scalare that, you're able to not just say to an investor, a founder, hey, you need to get the cash flow positive, but can you do the how and the when and the why as well? Yeah,
no, absolutely. We become part of the investing company's team. I think that's the essential differentiation here. So the example that Giles shares, one of our investing companies, when we first invest, they had no finance functions, discipline, whatnot, right? The founders are doing the bank rec and everything else. So I jump in and I work 2 days a week.
Right.
So it's hand-on real solving problem, right? So working together with the founder and the team to win the first significant RFP, reshape their financial model and, really pushing, the customer to pay. So it's real tangible deliverables that we are responsible and accountable for to help the founders to get through, those early days.
Actually, I want to touch on that, Jenny, because one of the things that I've found in having worked in this space for close to a decade is there are these patterns that emerge, right, for businesses that go through the life cycle. And I want to talk particularly about the CFO because this has been a really interesting challenge, and it's one way I've advocated for using a fractional exec for since I started the business. When you start, you essentially need a bookkeeper, right, and somebody to go and help you raise capital, and they're two completely different people, right? And so usually what a founder will do is they'll go, let's get somebody from an investment bank, corporate finance to help us raise capital, and accounts are an absolute mess, right? It's a basket case. They get the capital, you start to scale, and it's like, oh, we need to get governance in our house in order. So, the corporate finance dude, they're off. You bring in a financial controller style CFO, they fix everything. And then you start to get traction and success, and it's, oh, we're going to IPO now. Oh, we need the corporate finance investment banking CFO to make the ASX happy and investors happy, right? And you kind of go through the cycle of just having to vacillate between these two different types of people. And it's been a real problem for businesses and has really stunted their ability to scale successfully. Do you see that as well?
I certainly see that, first of all. I think it's a common challenge in this space. How we overcome that challenge is, first of all, the founding partners and partners of Scalare, we are all operators. We've been through that journey before. Yeah. So as I mentioned, I spent the last 15, 18 years working with early startups. So I've kind of been through the both side of the journey, right? And I think, having someone who really, first of all, doesn't mind get our hands dirty. For me, there's nothing that is too small or nothing that is too big, right? If we need to raise 200 invoices to get that cash flow in, let's do it. If we need to speak in front of an investor in the room and then just get that 2-3 millions in. Let's do it. But this is not just a one person. This is not just a Jenny, right? Again, coming back to Scalare, one thing that we both feel very proud of is we build a very supportive community that connects founder with investor, with advisors, like Giles, like myself, with, NEDs. And if the business kind of go through from, that one stage to the next stage, we have in-house expertise like James, right? He's brilliant in listed environment.
Before Scalare, James was my go-to person for any client that said, we're looking to IPO, we need a CFO.
There you go.
And he's still that person.
And he's still that person.
Absolutely.
Yeah. And then we have, Giles and Nick, who's also the other founding partners who's really familiar and know all the tricks in the private market. So I feel like within the Scalare communities, we got, 500-600 members as well around the globe who have, past experience. I feel like we are not just a big four, or an investment bank, or, we can actually go right deep in, but we can also step out and give that strategic input and view to kind of grow together with the investing companies when they go through different stages.
Right. I mean, just to add to that, is that we've all raised money for our own companies. I mean, over the James, Nick, Jenny, we've all been there and seen and done it. I mean, when we started the business, capital was really easily available. There was a lot of it. It's not so easily available now, So, although we try and work with the companies as closely as possible, we can't make promises. It's the story's the story, and the founder has to sell that story, and we will guide them through that process, and we'll help them with the investment memorandum, we'll help them with all the preparation of it. And coming to your point, Dexter, we'll work with them, start looking at the accounts first and sort of work systematically through it. But ultimately, the founder has to be, once we connect them with investor, they have to be able to sell the story, and we'll try and prep them as best we can to do that.
One thing that's really fascinated me is, as we've seen the startup ecosystem evolve in Australia, has been that perhaps, the places that we've gone to for inspiration and emulation have been the wrong places, and I'm talking specifically Silicon Valley, California, the fourth biggest economy in the world. Kind of doesn't make sense to me that having an economy of that size, so concentrated, and thinking that you can copy that and you're gonna have the same level of success, would work. So where did the inspiration come from to try a completely different model to the one that everybody else was trying to emulate?
Well, I suppose I'll start this off, but we're not coming from the traditional sort of venture capital or finance background. That's not our background. We come from running tech businesses and all the rest of it. Where it came about from was 10 years ago, my old company entered a thing called the Australian Technologies Competition, which we won, and it was a fantastic experience for us. We went through this mentoring program, and after that, I was invited to be a judge. And so for the last 10 years, I've been a judge of this, and I saw loads and loads and loads of really good, cool technology out of Australia, emerging technology, all looking for the same two things, capital and help. And all of them were struggling. And the venture capital community in Australia seemed to be further downstream than it is in other countries and other parts of the world. So there's a real gap in sort of not only funding, but that support that happens at the early stage. And that's really what informed us to start Scalare 3.5 years ago, because we just go, we've got experience, we've been seen and done it. We've always raised money. I've raised money in the public markets because there wasn't a lot of venture capital for what I was looking for at the time. We've all been seen and done it the rough and the smooth, and we've got experience that, and operationally had experience. So we figured that with our experience and Jenny's experience, that we could come together, help these companies from a capital point of view, but also help them, grow, scale, look for further capital. And because there's no time-based limit in our capital deployment, we're not a closed-end fund. We can be with them on the journey as long as it takes. And then we have the ability to sort of bring them out the other end. As you mentioned earlier, James is an IPO expert, Nick is a trade sale expert. We can work with them all the way through their journey.
Coming back onto investors, it's often said, and I think felt, that Australian investment community kind of lacks any real risk appetite. And oftentimes, kind of VC is almost looking at a business through the eyes that a private equity firm might. And unless you're in mining or property technology, we don't really tend to want to take a risk on. Is that necessarily true?
I think we start to see a bit of change is our observation. Over the last couple of years, people focus more on the early stage tech business. The risk appetites become broader comparing to the good old days.
Yeah.
And we also see more collaborations in this space, in the sense of, we see private equity investment firm like Scalare, we co-invest into the same opportunities or refer, deal flow to each other. So we certainly see a lot more of those partnership, I suppose, mode of operating than the kind of direct compete in the past. Yeah.
And Giles, going back to your point, I think, if you look at the data, it kind of suggests that Australia is good at getting ideas and innovation off the ground. Maybe it's not so great at commercializing that and kind of making really successful businesses from that. What do you think we need to be doing differently? Because it seems to me like at the early stage, I don't think Australia needs another accelerator program. I don't think we need another kind of fintech or innovation hub.
Yeah, you're absolutely right, because there's a lot of businesses that come with a great idea and they feel they can't commercialize it here, so they just disappear offshore. And I suppose that's where we sort of try and step in, because I think if you can provide some of that early stage capital and the support, and I think the support is absolutely critical. You can do that, and it's not just support and raising capital, but it's the sort of building your sales channels and things like that. So there's always constantly see businesses go, "Why we must commercialize in the US?" Well, why? Why do you have to go and commercialize? You've got a great sort of sounding board here in Australia. You can start experimenting, going offshore, perhaps in New Zealand, or if you want to go to the US, try in Canada and work there. It's a softer market to go into. So providing that support for the commercialization, but using the experience we've got, we've been doing this internationally for a long time, so we've all had experience in our business internationally. But to your point, Dexter, it's really providing that earlier stage capital and support for the businesses and keeping them on shore and guiding them down that sort of path of commercialization.
Jenny, how frustrating is it when you kind of hear these kind of advice by memes of you got to go to the US, right, and say nobody asks why, it's just that's what you have to do. How frustrating is it to kind of see people under giving advice where it's actually probably the worst advice you can give somebody?
Yeah, to be honest, very frustrated, okay? People sometimes underestimate the amount of investment, and that's time and money, okay?
Yeah.
As well as opportunity costs. Like rather than going, all the way to US, UK, why not look at opportunities nearby, right? Yeah. So it actually costs a lot more than what people think to take the business that far away from home. And I think, coming back to the environment that we are in right now, if founders can really leverage their trusted advisors and mentor around them and just really, listen to their story, the journey they've gone through, the mistake they've made, and just really explore, just in the APAC area, right? Like it's sad to see we have really, really, good business ideas here, born in APAC, but not really commercialized in this space. And I do feel that we have a lot more opportunities for founders here to explore.
It's a very good point, actually. I mean, Jenny's been a massive advocate of looking to the north of us, to Singapore, to Asia, for opportunities. There's huge amounts of opportunities. We were just talking about it today, that Singapore is a really good environment for commercialization and for tech development and things like that. So, looking there perhaps first instead of looking to the US to take, the US is such a fragmented place and very complicated to get into, whereas going international market expansion through, say, Singapore is probably a hell of a lot easier than sort of starting with the US. And Jenny, that's been her mantra all along, with the companies we're working with, and rightly so.
Yeah. One thing that's, it hasn't surprised me, but it has a bit within the kind of startup community, has been the number of rebrands and name changes that I've seen in the last 12 months and pivots. And I remember years back, one of my old bosses and mentors said at the time, in a downturn, there's two types of chief exec, one who changes the business and another who changes the logo. And, what he meant by that was, hey, look, kind of the real people, the real deal will come in and they'll change the business and turn it around. Others will just kind of focus on, the low hanging fruit that doesn't really make a change. What's your, kind of guidance around what I call the dreaded pivot, because as soon as there's an economic downturn, again, you get people coming out saying you've got to pivot, you've got to change, you've got to, go and change markets, change the logo, change the brand, all of this change. Is that necessarily the right thing to do, or is it sometimes just a case of just seeing out the storm?
Yeah, well, we pivot too many times and people lose patience. I've seen it. Certainly, I come from working in the public markets. I was in a listed environment, and you see that, with companies pivoting one too many times, and investors just run out of patience and lose interest there. So, obviously, if it's not working what the company's doing, of course you need to change. But, be think very carefully and, look at the strategy before you make any major changes. You don't want to be doing it again and again, and then investors run out of patience.
Can that be just something where perhaps you just got the wrong channel, or it's not a case of changing the product, it's just a case of looking at a different market or different customer?
I've said, look, for example, there's one of our companies which was really going down a B2C path and it just wasn't working. Yeah. So the product was fundamentally sound and just readjusted to a B2B model, and that's beginning to work really well for it. So it wasn't a huge change, but it's just changing the focus on the customer. Yeah. And that's been really successful for them.
Yeah. And it doesn't cost much money to do
that's
that, right? So Jenny, I wanted to kind of go back to this cash word, right? And cash flow. Again, we talk about this where you get this kind of generic advice and, kind of cut costs, increase customers. We've got a lot of businesses out there, and look, unfortunately, I think in this next 12 months, from the discussions I'm having, I'd say probably 50% of the fintech community is going to go out of business if things don't kind of change in the next 12 months. Given that, they might have a 12-month timeline, what are the kind of 2 or 3 things that you would be, if you were going in there today, say, we've got to do this today to make sure that we're here to fight in 12 months' time?
Yeah, first thing I look at is whether we have explored all the government grant opportunity. Right. Yeah, a lot of people kind of overlook that, or we know they're out there, but it takes time and effort, right, to apply, and there's chance that you might miss it. But evidence shows it's actually easier and likely to be successful than you now go out and trying to raise a large amount of capital or win 10 new customers. So because that's the first thing that I will look at, some housekeeping, right? Yeah. And secondly is I will have a very thorough review of where we deploy fund right now. So just cost base. I'm not asking companies not to spend. That's not what I'm saying, but just really understand what is my return on investment for where and how much I choose to spend. I think just to assess that, reevaluate that against the company's strategy and goal for the next 6 to 12 months is really important. Yeah. And I think, again, I mentioned, think about the creative alternative funding options out there, right? There are facilities, credit facilities, loan, there are finance-based or revenue-based financing. Just really explore the options. And if you do have to raise, consider maybe a smaller amount. Yeah. Right. Reduce the size, and then let's buy another 6 months. Yeah. Hit a few milestones, and let's go out again. So just be prepared of that kind of mindset. All we want is just get through this 12-month period, right? And then you have a chance of create something much bigger in the long run.
Just stretching that runway out and just maximizing what you have. Just because the uncertainty is the problem. Obviously. Some companies, they can't get away from the have to raise, but the timing is everything, when you do that. So our advice to our companies at the moment is maximize your runway as long as you can at this moment in time. Yeah.
Unfortunately, when you have people under pressure, you do get some bad actors who take advantage. And there's some, unfortunately, I've personally seen, a lot of founders burnt by so-called advisors.
Oh God, I see it all the time, Dexter. They go, pay us a retainer of 10 grand a month and 6% success fee, and we'll get you capital. And then there's no responsibility. I've seen it, unfortunately, way too many times.
So my kind of question to you, Giles, are what are the things that founders should be looking out for that are red flags so that they avoid this? Because these are the people that I say, if you're flying the plane and you're flying whilst you're building it, this person's going to crash you straight into the mountain.
Well, our advice to them is, look, talk to us first, let us work with them. We know who the bad actors are and we know how to manage it. Again, not naming any names, but one of our portfolio companies did exactly that. They had someone came in and they were just about to sign a contract and I said, don't do it. Let me meet with them. And I found out that these people were not going to actually add any value, going to drain their dwindling resources, and it wasn't going to be a good outcome. So we're always saying to them, and this is part of, to Jenny's point, the guidance we give our companies is work with us, we'll work with you, and we'll try and help you manage this. Our interest is not in the monies we make from capital raising. Our interest is to making sure the companies are invested, they grow, and we're with them on that journey. And the capital raise is just something that we can support them with on that journey and trying to avoid the pitfalls.
And I maybe add to that, this is probably more of a woman thing, trust your instinct, right? Sometimes if you don't have a good feeling, you talk to maybe a few more people just to sanity check that, right? So hence it's very important to surround yourself. Like people say that founder is a very lonely place, but just really surround yourself with your trusted advisor and don't be afraid to say no, right?
Yeah.
If somebody charge you a 10K retainer and not delivering anything you don't even need to wait for 3 months, just 1 month. If you're not happy with the outcome, sit down, have a very frank, open conversation and address it right and there. So I think, just that, that ability to make that decision and empowering yourself to make that decision for your business is also very important.
Yeah, try and not get into any sort of contracts like that. But you're absolutely right. There are lots of people out there, bad actors who, will promise the earth and deliver nothing and consume valuable time for these businesses, which they don't have.
Yeah. Right. I want to raise the mood of the discussion now because, look, it has been a really challenging last 12 months. But these things do not last forever. And whilst I was kind of, ringing the alarm bell, maybe it's 12, 18 months back, in my business, I'm seeing the green shoots and I'm seeing, international businesses look at Australia again. I'm seeing businesses, looking at their structure and their executive structure and scaling and moving to the next level. And this has all been happening over the last, 6 weeks. So I think we're starting to see now, and I think you'd mentioned as well, you're starting to sense there's a little difference in the mood of investors. So what are what are you seeing from investors as to the things that, the ideas, the technologies, the industries that they're really getting excited about that, they want to invest in?
Look, you're absolutely right. The investors are looking to invest again. There's definitely interest again, where 12 months ago, people were sitting on their hands and just wait and see. I can see that there is genuine interest. We see so many companies from such a broad range of different, industries. I think the stuff that investors are really interested at the moment is stuff that, making fundamental changes in this sort of society we're in. So circular economy, clean tech, green tech, all these sort of things are really interesting. But having said that, the stuff that we've recently invested in has been ed tech. We've had some ag tech, we've had some compliance businesses. I mean, it's a broad interest from our investors, but they're definitely beginning to have signs of re-engagement. People are looking now to write checks again, slowly but surely. Yeah, it's not home and homes yet.
No,
it's definitely the green shoots.
About green shoots, yeah.
And another thing that I noticed investors are looking for these days is diversity and inclusion. Yeah. So, for example, Scalare, right? We have 26 companies across 6 different countries. And from a gender equity point of view, 1 in every 3 to 4 companies is either led by a female founder or have a female kind of executive team. So I think that diverse and inclusive investment portfolio give the investor the confidence that in terms of chance of success and the pathway to profitability, like it really adds that extra comfort. So I encourage founders to think about that when they prepare their pitch deck, right? Like, not to make up stories, but just if you are doing well or if you are aware of this in your business, in your day-to-day practice, highlight that in your pitch deck. And I also encourage, female founders and business led by female executive team come out. Like, there are investors out there that are looking to support you. Scalare is definitely one of those. Yeah.
But I mean, just the other thing to the other side of the coin is that, say, what are investors looking at? equally, you get floods of different themes, where suddenly there's a whole lot of AI companies or Web3 companies and all the rest of it. It sort of comes in waves at such But, I think, again, it's a sort of diverse portfolio. We're seeing such a broad range of different businesses. A lot of it for us is mainly software rather than hardware.
I think we talked about the pivot before, and I think one of the real dangers about the pivot now is these hype cycles are getting shorter and shorter. I mean, we're already over the AI one, I think. Yeah. It was, 6 months? Yeah. It's over with. So if you're going to kind of go to that effort of trying to ride the next wave, you've got to time it 3 or 4 waves ahead, right?
That's right.
Yeah.
Sometimes it's probably less about like what's popular. I think founders need to be very mindful of the purpose of why I build this business from the get-go, right? I think it's that impact and stay very true and honest about that impact because the wave comes and goes, right? Nope. So coming back to fintech, again, our portfolio, it's quite diverse in the sense that we cover 10 different verticals, but fintech, we have a few companies that kind of fits in that industry. Even that industry itself, we have companies that looked at cross-border payment. We have companies that look at, corporate credit cards and expense control, companies that look at, smarter compliance and risk mitigation solutions. So even within the fintech itself is quite diverse in a sense that, it covers from A to Z. So that itself creates opportunity for, upsells and cross-sells, right?
Absolutely.
So that's important.
Yeah. I mean, Giles, you talked about, I think, 5 different, kind of themes there. Ag tech, ed tech, clean tech. Yeah. I've got customers in my network that are all in those spaces, right? Because
send them our way,
right? They all need. Everybody needs finance, right? To make these operate. They need. They're highly regulated. They need compliance solutions, right? So, and I think it's this kind of lateral thinking. And one thing that really I want to talk about more is when you talk about diversity, Jenny, because I've got no science to back this up, right? But I think it's something that's worth talking about. When you look at diverse businesses and unilaterally, they perform better, right? And I do wonder if the reason that they perform better isn't necessarily because of the diversity. The diversity is the byproduct of open-minded leadership that's inclusive, that focuses on getting the right people, the best people, right?
I certainly agree. It's more of a mindset thing. I think that diversity and inclusion is actually the outcome of that mindset. Yeah, you need to have that mindset first to welcome and then practice drive, and then you see the result, right? Again, I can't really speak on behalf of other, key players in the market. But coming back to Scalare, just amongst our core team, we actually have people coming from 6 or 7 different cultural backgrounds, and our gender diversity is pretty much about 50-50. Yeah. So I think just looking at how we operate, like every week when our IC team come together, we welcome different perspective. We have, healthy discussion and debate sometimes. And I think coming back to your point about how would that link to the business performance and profitability? We certainly feel the direct impact. And we also see that from the companies that we invest as well, right? We introduce, female NED, we introduce, executive team from different cultural backgrounds, and we start to see over time the dynamic, the chemistry change and then lead to business success. So we've seen that a couple of times within our examples.
No, it's fair to say that some companies have come to us that we invested in who have been out in the big world of VC and got really intimidated by it because it is quite an overwhelming place. Yeah. They come to us and they speak to someone like a Jenny and they who really understands and listens to them, and they find it a much more comfortable environment to work in.
Funny, I had a chat with somebody just this morning, and they're a really successful founder. And what was interesting was this founder said that when he was, the VC approached him actually and said, "We need you to do a psychometric test." And he went, "No." Said, "That to me sounds like a master-servant relationship, and I'm looking for a partnership."
But that point about partnership, that is absolutely critical. It's not us and them. We're working together. Yeah. We're their engine room to try and get them successful. And it's a partnership. It has to be a partnership. Yeah. It's the only way it works.
Right. Here's the question for you, Jenny. You've got $10 million. Where do you put it right now?
In terms of investment industries,
Yeah.
personally, I love the business that creates direct impact, do good things to our community. So I'm more thinking about, those clean energy technology, those that really, increase our social responsibilities, not necessarily just measuring, the ESG report, but just really, I suppose bringing that positive governance and social responsibility impact to our communities. Like that would probably be the thing that is most close to my heart.
Right.
Yeah.
I have to say, I share those thoughts entirely. I mean, that's the technologies competition I mentioned earlier on used to be called the clean tech competition, and that's unfortunately, at the time, there wasn't a lot of love for clean tech, or there is now. But I think anything that improves the environment that we live in is very important. But equally, a business where if we're going to invest $10 million, we want a business that's got growth potential beyond these borders. Has got real opportunities to scale outside of Australia and become a global business. That's what we're interested in. If it fits those sort of industries that we like, even better. But another point to all of this is, we only invest in companies where we can genuinely add value. We understand the industry, or we have someone in our community who can plug into that industry. If we don't understand it, pharma, etc., we're not going to participate. We're not going to be able to add the value. But it's got to be somewhere add value, but something we're also passionate about as well.
Yeah. So we're coming to a wrap up. Before we do, we've got incredible founders listen to this podcast. We also have incredible talent as well, and I'm sure many of them are contemplating career as perhaps a fractional exec, as perhaps wanting to make a move into this type of business model and an environment. First of all, on the kind of talent side, what would you look for people that you were potentially bringing into the business as you grow and scale?
Well, we see a lot of people, and not all of them are suited for what we do, but we're looking at someone who's got transferable skills and a genuine interest and passion in the startup world. That's it. And they really can sort of roll up the sleeves and are not afraid to get their hands dirty. So we've built up a really good sort of network of people who will sort of fall into that advisor category. And some of them actually then go on to be a non-executive director for us, as a Scalare representative of these companies. But it's people who genuinely love that sort of scale up startup and can, translate their skills into it.
And Jenny, from a founder perspective, if we've got people that are potentially looking at partners and investors, what are some of the criteria that you kind of want to see if people are reaching out to you?
We always talk about smart money, right? So capital plus, but I think the real differentiation here is people really do what they say they do. And sometimes it's really hard to kind of get that from one or two meetings if you just happen to know someone, So I think one thing that I would encourage founder to do is, first of all, leverage your dear near, right? Leverage your network around you. Could be other founders that you know or your existing investor on your cap table who share similar interests. Ask them whether they can make some intro, right? Because it might be, what you need to look for is like-minded investor. And there's no one size for all answer, but whatever matters to you, founder of company ABC, what like-minded means is for you to really go out and hunt for that. So when we say capital raise journey, usually starts 6 months before you even start to put your deck together, because you need to look around and see the community and network around you and start to target, these are the top 3 or 5 people that I think is like-minded, who can provide that smart capital, who will do what they say they will do. You have all that due diligence almost done up front. Yeah.
It's amazing advice, right? And I've been doing a lot of stuff on LinkedIn around job hunting. Yeah. And I've been giving exactly the same advice for job hunting. And I think what people do is, whether it's raising capital or it's looking for a new job, they do stuff that is, if you look at the sales funnel, the 95% of stuff that's heavy activity driven, very little result. And the ones who are successful spend 95% of their time on the 5% of the activities that actually get results, which is networking, research, clear value proposition, talking to the right people, asking for help, doing it in a way where it makes it easy for people to help. Not asking for an hour of time, but 5 minutes, or hey, can I ask you one question? Like this stuff is the kind of differentiator, those who are successful and those who aren't.
Yeah, you're absolutely right. And look, talking about using that network, we've got this fantastic network at Scalare, and we leverage that as much as possible, particularly for sort of companies that are trying to grow their sales, are trying to get their first 10 customers on board. And rather than just going through a volume spray, it's much better to get a warm introduction from the Scalare network and sort of get a position in there. It's so much easier and leverage that network. And so we're really, really keen to make the most of that network all the time with our companies.
Yeah, I think it's important as well to the moment that we're in. I think it's fair to say founders are feeling pretty unloved right now.
Oh, yeah.
And, there's that saying, if you want to go fast, go along. If you want to go far, go together. And I think we're kind of being reminded of that now, that actually, the power of networks, the power of, not just collaboration, but partnerships is kind of essential, and particularly in the Australian market where there just isn't the kind of safety net of large capital, large population, where you can make a lot of mistakes and still find a path to success.
One thing I just want to add, just to balance that point a little bit, trust is one thing that is critical, but I also see some founders, they become too trusting and then they need to pay for that. So, for example, when we go through the entire funding journey, at the end, you got someone to give you the capital, exciting, awesome moment. You sign whatever term sheet and just get that money, right? But just be very mindful of the actual term and condition of the term sheet, right?
Yeah.
Like, don't just go too trusting. You do need to look at whether there's any special rights, and also try to avoid just relying on one single investor, because sometimes, through that trusting relationship, this is always the same person that give you money. But coming back to the point that sometimes founders feel that they got advantage by others, like that's because if you only have one single investor, that person have a lot more negotiating power, right, or direct influence to your business. So trying to also build a diverse investor portfolio as well.
So just like you need a diverse customer portfolio, you need a diverse investor portfolio.
But to your point, is there's smart money as well. So building a cap table of people who understand what you want and can help you along the way. It's not just dumb money. It's money that's going to really support you. The people who can open doors, the network that open doors. That's what we always try. When we're working with our portfolio and they're looking for capital, we try and find people who match the right type of investors. Easier said than done now, but in the past that was what we did. Obviously, things will improve in the future.
Yeah, brilliant. Where can people find out more about Scalare Partners?
We have a website which has all the resources. And so what we do for all of our companies is we have a sort of really good database of resources on how to raise capital, how to access customers. And we have that all on our website, so accessible by all of our founders. But Scalare.com, that's where we're located. And I will just add, one other point, Dexter, because it's important for the startup community. I mentioned earlier on where we were involved with the Australian Technologies competition. We're running that competition now to foster sort of up-and-coming innovation in Australia. It's been so good to my company 10 years ago, and I've seen so many good things that we've taken over the operations of that, and it's supported by federal and state government money. And we're just coming to the end of the competition right now. So we're having sort of finalists judging tomorrow. And then we have two gala events, one on the 12th of September in Melbourne and one on the 28th of September in Sydney. And we really encourage people from the sort of startup community or the whole ecosystem come along to that, because you'll see some really good companies, good chance to network and mingle with the sort of startup communities.
We'll put a link in the show notes to that. Well, folks, thanks for listening. As always, you can connect with me on LinkedIn and Twitter. If you're new to the show, make sure to give us a follow. It really helps me not only spread, the good word to the startup ecosystem, but it also helps in us getting great guests on like Giles and Jenny. Until the next episode, keep well. Fintech Chatter is produced by Tier 1 people, leaders in fintech executive search. We'll find world-class leadership talent to build world-class fintech ventures, and you can find us at tier1people.com.